The Bitcoin price has doubled in only a month, and there is no doubt that the bulls have dominated the Bitcoin narrative. But this particular on-chain metric suggests that the top is near and we could be looking at an 80% correction. Now, while this correction does seem imminent, we cannot ignore the bullish scenario, one that suggests if Bitcoin breaks this consolidation pattern bullish, we could see a $72,000 Bitcoin just right around the corner. Trading this move can be extremely profitable, but it could also just as easily get you wrecked. The most important thing you can do right now is to have a plan. So you're going to want to stick around until the end of the episode because I'm going to show you my plan to capitalize on some serious gains when this move finally does happen. I have exact targets for both the bullish and bearish scenario of this breakout, so you're going to want to stick around until the end because you do not want to miss this incredible opportunity.
Sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everybody. Johnny here. Let's get right into today's episode. I do have a feeling I don't have much time to get this out to you guys. So Bitcoin has just been seeing incredible gains throughout the entire year of 2020, and we are off to a pretty damn good start in 2021, if I do say so myself. However, we are at a sticking point with Bitcoin right now. There seems to be a lot of analysis out there suggesting that we could be at a top. And to be very honest with you, it would be a very welcome gift at this point. Being able to buy Bitcoin anywhere near $20,000 would be absolutely freaking amazing, but we might get our wish. So this is the Bitcoin 12-hour chart. We are looking at a potential topping pattern here, but what we will discuss later in today's episode is a very bullish idea coming out of this topping pattern, or in what could be a continuation pattern. Now, since the correction last March where Bitcoin fell all the way down to $3,620, it is up damn near 1,000%. Now, this 1,000% move hasn't been entirely smooth. There have been a few pretty decent corrections on the way up, about 7 to be specific. Now, what we are expecting here obviously is a correction at this point. If we bring up the 21 daily EMA, again, this is the 12-hour chart. The 21 daily EMA, it has been coming down and it has been testing this EMA. So if we fix or correct the offset here, you can see that we did get one touch here. There was a touch all the way back here right before the breakout. We got another touch here. And honestly, if you were just setting long orders on the 21 daily EMA, you might be doing pretty damn well at this point. But what it looks like we are in is a symmetrical triangle. These patterns do not have a bias one way or the other, as they break bullish and bearish about 50% of the time. Now, one thing we could be looking at here, we could actually be looking at a bull flag, meaning we are due for a one-to-one extension from the beginning of that impulse move. So if we take a trend-based fib extension and go from the very beginning of this impulse move to the upside where Bitcoin hit the all-time high, and then we put a point there, and then bring our 0 point all the way down here to this low when we did see that huge 26% correction. If this is indeed a bull flag, we are looking at a pretty damn significant move out of Bitcoin, putting us up over $72,560. Now, that is a very hefty move. Another way you can take a measured move here is if you go from the beginning of the impulse move to the high that is inside of this pattern. It is a half staff pattern if this is indeed a bull flag, and then then you will take the bottom of the trend line and put it at the lowest point before the breakout. So actually right now, this would make this with this dash line probably the more valid triangle pattern here, giving us really a target right around $58,000, just shy of this 786 fib extension. So is it even plausible to be discussing a $58,000 or $72,000 Bitcoin? I think with the institutional money coming into this market over the last year, I really think the answer is yes. So here's, we'll run through some news articles really quick. So Bitcoin smashes through $40,000 and data reveals what's behind the huge 2021 price boom. Basically, this goes on to just mention the enormous amount of money coming in from institutional investors. This says that not only did the aggregate number of Bitcoin in whale addresses hit its highest level all year at 11.46 million, but addresses with a balance of 100 Bitcoin or more surpassed 16,300, a reading last seen on March 16th, 2020, right before the crash. So this massive Bitcoin accumulation helped the price soar 50% through December, with the rise accelerating in the new year. Bitcoin price has added a further 40% so far in 2021. So this really just adds more bullish confluence to our bullish ideas. So the amount of money coming in from institutional investors is really what's driving this market cap to get so high. And honestly, guys, I really think that we are in store for a pretty epic 2021. So this goes on further to talk more about the institutional money coming in. It says that the last bull run was sparked in October by news payments giant PayPal. I guess they're going to be offering Bitcoin to customers, but I'm pretty sure it's a derivative form of Bitcoin. So be careful buying your Bitcoin through PayPal. And this bullish sentiment was accelerated by the wave of institutional interest in Bitcoin and Wall Street giants, including Citibank and JP Morgan. So in December, a leaked Citi report revealed one of the bank's senior analysts thinks Bitcoin could potentially hit a high of $318,000 by December of 2021, calling it a 21st century gold. Well, Bitcoin is a much better gold than gold is. And then this is just more bullishness, more hopium, more bullish confluence for our bullish ideas. This article says that Bitcoin is expected to snowball as more institutions get involved in 2021. It says the institutionalization of cryptocurrency was the emerging theme of 2020, said Seamus Donahue, VP of Sales and Business Development over at Medico, a provider of security critical digital asset infrastructure for financial institutions. Now, he goes on to say that while the majority of the investment focus has largely been on Bitcoin, he says that Ethereum will likely be a high beta alternative to the dominant narrative of Bitcoin as an institutional investment asset class. He said it is possible for the same FOMO, which pushed retail into crypto and Bitcoin, causing its price to soar to all-time highs in 2017, is going to be replicated in 2021 as institutional FOMO. This article goes on to talk about Roofer Investment Company just in December. In December, they were raising their allocation another 2.5%, something they did just before Bitcoin took off and hit more highs. So this comes at a time when investors are increasingly looking for more exposure to alternative assets. Customer fund exposure to mixed investments is up 30% between January and November 2021. So let's just take a peek really quick at some of these companies and their stock price. It's just been going up. So this is the Roofer Investment Company, as I just mentioned. As you can see, it's had pretty consistent gains, especially since October when Bitcoin began this parabolic run. Look at MicroStrategy. MicroStrategy is also looking parabolic. If we just go back to October, you can see it follows the Bitcoin parabolic curve almost exactly. The same thing with Galaxy Digital. So there's a trend here. There's a very, very clear trend. Institutions are getting into Bitcoin. What does that tell you? Okay, so we have mentioned the bullish idea, and at the end of the episode, I'll give you guys a bit more detail so you can be prepared for this big move. But there is a very strong possibility. In fact, I think it's the likely scenario here that we do get a strong retrace out of Bitcoin. But if we break bullish, we could see a $50,000 Bitcoin tomorrow. So this is pretty exciting time. Either way, we're getting a decent percentage move, whether it's to the upside or to the downside, and it's going to be very, very, very tradable. Okay, so an indicator I want to talk to you guys about today, this is called the SOPR, or the Spent Output Profit Ratio. You can get this on Glassnode, and it's pretty interesting. So this fundamental metric represents the profit ratio of Bitcoin tokens moved on chain, measured through the variation between the purchase price and the sale price. So a value on the SOPR greater than 1 implies that people are, on average, selling at a profit because the price sold is greater than the price they paid. Likewise, when the SOPR is below 1, this implies that people would be selling at a loss, according to Glassnode. So each time this on-chain index rose to a value equal to or higher than 1.2 over the past 8 years, it served as a sell signal leading to a steep correction. So let's go ahead and test out the idea. So for instance, the SOPR in 2013, early April, rose to about 1.19 when Bitcoin was peaking right up here, about $268.70. Following this milestone, brand new all-time high. This is pretty awesome time for Bitcoin. I wasn't trading at that time. I was using Bitcoin for other nefarious activities. But if I were a trader, I would probably have gotten wrecked in this huge correction. So, this corrected all the way down to $51.30. Or actually, this chart here for Bitstamp has it down to $44.06. So there's another instance of the SOPR being fairly correct in November of 2013. So we're in May, June, September, October, November. So in November of 2013, the SOPR rose to a high of 1.24 in late November. And then Bitcoin saw a huge crash by about 86%, dropping from its all-time high here at $1,177 all the way down to a low, get this, of $151.38. But, the previous one in 2013 when the SOPR was so high was a little bit more steep than this one. This one was a bit of an extended correction. And what's interesting about this indicator at this current point in time, the bull market we are in, you get a lot of people saying this time's different. People have been saying that since 2013. Well, in fact, this time is different. We will get some similarities between the previous bull runs, and I do feel like the bull cycles will still align. Also, I do not think that this is the end of this bull run. I think we're going to get something like what we see here. So we're going to get, a local top. We'll get a very short 3, 4, 5 month bear market where price will probably move sideways. We might even get some small pumps in between. And then, come the end of summer, early fall, late fall, possibly, I think we're going to get another parabolic rally like what we just saw out of Bitcoin. Okay, so if you're looking to play the short trade here, you do have a possibility of getting some pretty significant movement to the downside. And, that's perfect. That's exactly what we're looking for, a breakout to be able to ride that price action and make a return on the percent moved. So if this does break to the downside, a few different ways we can find targets here. If this is indeed a symmetrical triangle or even a descending triangle at this point, we'll take a measured move from the top of the price action down to the bottom at the beginning of the triangle. Put this at the point of breakout. I like to do these. I like to take my measured moves for these the same way I take the measured moves for my bull flag. It's a bit more conservative, but at the same time, it gives me a bit of a range. So I'll take 2 there. So I have 1 arrow. And then I'll take this next arrow here, again, coming back to the bottom of the price action. And then we'll place this one at the trend line. So one is at the last touch of the top trend line, and then the next is at the bottom where the breakout should happen. This will give us a bit of a range to go ahead and look for a re-entry position here. I really do not see the price coming down below the 21 weekly EMA, which happens to be right at the 272 extension to the downside from the most recent price action. So that could definitely be a possibility. One thing I am looking for here, so if we do get price action to break this to the downside, we should get a breakout across a movement across this lower trend line, and we're looking for volume. We're looking for volume confirmation to let us know the breakout is in fact happening. And then after price action breaks down, we should, it's not what's the word I'm looking for? It's not guaranteed, but we should get a move back up to the upside to retest this former support, now turned resistance, before continuing to the downside. On that retest of this lower trend line is where I would look to enter into a short trade. So let's go ahead and see what kind of risk reward ratio we have here. If we take our short position and say we do get the breakdown, we should be able to come up again. It'll probably be right near this 0.5 fib extension. At that point, we would take our stop loss and put it above the top trend line of the triangle. It's about 9%, so make sure you're careful with your leverage. And that gives us a T1 right here about 19%, which is outstanding. And then a T2 at about 22%. And then, you know, if we do come all the way down to the 21 weekly EMA, that's a 44, almost 45% correction. And if you use 2 or 3x leverage, you could really do pretty well on that trade. All right, and if you're looking to take a long trade here, you're going to essentially just do the same thing, but in reverse. So price action is a little iffy here. I would not be trying to front run the price action, trying to get in lower. I would wait for the volume confirmed breakout. Again, you're looking for a giant spike in positive volume here, a movement up above this top trend line, this diagonal trend line, also happens to line up with the 382 and 0.5 fib extension on this most recent move here. So you're looking for a breakout across the $38,900 level with volume, at which point you would enter into your trade. The first take profit would be 44,664. And then the next take profit, which should be where we make it if we do get the breakout, because it is the measured move of this bull flag, takes us all the way up to the 786 extension here at 55,715. And then best case scenario is we get a 1-to-1 extension all the way up at 65,873. Now, make sure you guys are taking profits. Don't leave Bitcoin on the table. If you get to, you know, a point in your trading plan, so you should have a trading plan that says I need to make this many trades to make this much % profit in this amount of time. You should know before you enter into any trade exactly where you're going to exit said trade. If we do get the bullish breakout here, volume confirmed across this upper trend line, we're looking at a possible 48% move, and then on the low side, a 17.8% move, which is still a pretty damn awesome trade. So either way, doesn't matter which way this is going, it's definitely going to be tradable price action. Just make sure you're very careful of your leverage and be very, very careful where you're putting your stop loss. All right, guys, that's all I have for you today. If you want access to these charts, I will put links to them in the description below. Make sure you join the free Telegram group. I make sure everyone is updated on my trading ideas in real time. And that's it. Thanks so much. I'll see you all tomorrow.